Stephen, thanks for joining us.
Thank you for having me. Good afternoon.
Do you think this will spark a major wave of further consolidation?
We do, honestly. I mean, I don't think it's going to be immediate, but I think over the next 1 to 3 years, you could see a lot more activity of a similar ilk, whether it's larger regionals doing MOEs, the $100 to $150 billion in asset banks pairing off, or whether this motivates USB or PNC to come down into the Southeast and look at someone like Regions, which is now kind of the remaining target of focus for people down here.
I guess, Stephen, if we look at the share price action today, the biggest banks did decline. USB and PNC also lower, but only slightly lower. Are those the two that will be most threatened and most surprised to see this deal take place today and therefore most eager to do one themselves?
I think so. I think that's the right take. I mean, I think that if you wanted to be in the Southeast, right, SunTrust and then maybe Regions to a secondary degree would be the targets you look at. And so now one of those potential acquisition targets is gone. So, and BB&T, the new BB&T, whatever that's to be called, will be competing up against you. So I think this is going to show those banks they don't want to go it alone and they need additional scale to be able to absorb some of these technology costs and again, compete with the larger banks, but do so from an area of flexibility from a regulatory standpoint, being under $700 billion in assets. So I think those are the first primary. Mm-hmm.
It didn't get a lot of attention, that question, Stephen, but is there likely to be any regulatory scrutiny on this deal? I mean, it had been so long since we've seen a deal in banks in this size since the crisis.
Yeah, it's a great question, Sarah. I mean, I think what's hard is BB&T still has a BSA order currently, again, which has been done away with by the FDIC, but is still outstanding with the Fed. So I think some people have some slight consternation, but that being said, BB&T is not new to M&A, and you have to believe that they've done their checks with their regulators to know that this is a deal that their regulators feel good enough to kind of give them some sort of preliminary blessing on. So I think assuming it gets done, which I think is a fair assumption, we see additional activity from here.
Stephen, talk to us about that technology aspect that you just said. They talked about it a lot on the call. They talked about it on the interview with David Faber earlier today. Does this tie-up actually allow them to compete on the technology front with the likes of Bank of America, for example, or not still enough of scale?
Yeah, I don't know that they can compete quite at that level, and I don't know that they really need to, quite frankly. I mean, BB&T, for instance, was going to spend $1.1 billion on a standalone basis on technology. They told us recently at their Investor Day. They're talking now about an incremental $100 million. That money would have had to have been spent at BB&T and at SunTrust. So you have a savings from getting the scale and the integration. And at the end of the day, you have to do enough to maintain your customer base and still grow it. But there's a lot of folks that don't want to be at a Citi or a JP Morgan. So I think they have to do enough here to be competitive, but not necessarily quite on that same scale. And I think this allows them to do that.